Hi, welcome to my YouTube channel, Prime Nexus. If you're coming across my video or training for the first time, please subscribe to my YouTube channel, turn on your notification, and you can also share my videos so that you get notified whenever I make new videos. And a returning subscriber, I say thank you for being part of the family. So here I want to also illustrate on, I want to take us through another illustration. The last training, the last class was on illustration 6. Now this is illustration 7, a little bit more, a little bit complex, but not really complex in a bigger way than the previous one. So the first question here is January 1st 2014 commenced business by introducing 250,000 into a bank account. So this is a capital that is introduced. So first of all, we have to recognize two things. We have to recognize something. The first thing we have to recognize what account is affected by this transaction. With the look of things, capital account is affected and also bank account is affected. Remember, debit the receiver, credit the giver. So we are crediting our capital account, which is the equity account, and we're also debiting the bank account. So the best way to handle that transaction is by going to general journal. So I'm going to go to company here, then I'll click on make general journal. Now once I'm here, I'll select the date. So the date is 1st of January, so I'll quickly just click on the as 2014, then this should be 01, then this should also be 01. Okay, so the account, if I don't have the account, I can also create the account from here. So do I have bank? I don't have any bank, so I can just click on add new and then click on bank and then continue. So just have it as, let's say I use OP come. Okay, so I don't have any balance. This is empty, so this is the first time, so I just use a zero balance. So 250,000. So I can just say being capital introduced, and also click on the next. Then I look for an equity. I have two equity: opening balance equity and retain earning equity. The opening balance equity here is if I have opening balance, so I would not start the business with the bank. Instead, the bank has not been in existence, so we should not have any opening balance. Retain earning, I have not done anything before, so we should not have any retain earning. So what I will do is to add new, then I'll click on equity, then continue. So I can put owner's contribution. I can just name it owner's contribution. Okay, owner's contribution. Then I just save and close. So I have the two. I have 250. I will save and close. This is the first general journal I'm entering, so I can just use it as 1001. Then save and close, and I'll just hold on. I might still need to come back to this same place. So sorry, I was supposed to, this 90 days will keep on coming up because the transaction is more than 90 days in the past. So January 5th, bought 50,000 furniture from Adam Enterprises on credit. Remember, two accounts are affected. One is the furniture, which is the asset account, and the second is Adams. But Adams here is the credit transaction was done to Adams. So credit transaction in QuickBooks or in accounting is account payable. In QuickBooks, you don't record account payable. In QuickBooks, you only create a credit purchase, and QuickBooks will do that. I will show you how to go about that. So once I see credit purchase, the first thing that will come to my mind is just to enter bill. So I'm just going to enter bill. So once you enter bill, it means you are buying on credits. You are making purchase on credit. So I'm going to select who am I buying from, Adam Enterprises. From this drop down, there is no vendor. So, but in our question, Adam Enterprise was still stated. So I have to just click on add new. Let me add Adam Enterprises, Adam Enterprises. Okay, I'll just copy that. So with this name and on this first name is okay. You can just go ahead and click on OK. So now we have Adam Enterprises and the date is January 5th. So I'm just gonna on a Sunday, January 5th, we bought furniture and fittings. So I'm on expense tab. Now this question did not say that this credit transaction has a payment terms. So QuickBooks automatically assign a 10 days due date for payment. So but in this question we don't have 10 days due date for payment. So I'm going to select the terms from here for this particular transaction. So it's going to be due on receipts. As I'm selling is due, as I'm buying, sorry, is due. Oh sorry, the vendor did not give me any grace. The vendor is, I'm buying from my vendor and expect payment to be made. So we'll just go to, so it's due on the same date, right? Because based on the question we're not giving payment terms, so I had to make sure that was corrected. So you have to be on this expense tab, not your item, expense tab for this particular transaction. So let me just type if I have furniture. Most likely I have furniture. Okay, there's furniture and equipment. Then worth 50,000. So I can just say credit purchase or leave the memo as is. And then after that I just click on save and close. Sorry, you keep on seeing the warning, but I would think I can just go check edit that so that it doesn't keep on coming up. Let me see, where do we have it? Accounting, company and preference, one each transaction. Let me just use let me just leave it. It should not want me for now. So let me just finish it, man. So I can just set it off that way. I don't want it to keep on showing me that 90 days. Okay, now the next, on January 15, bought office stationery for 1,000, paying by check. Now we have money. Sorry, we already have money, of course, with this 250, but now we are paying for this transaction. So if you are writing by check, paying by check in QuickBooks, if you are making payment, any payment you are making, you make use of write check. So where do you see write check? Go to banking, you see write check. So I'm going to pay from the OP bank account. So OP bank account has already been selected, and you can see we have 250,000 balance, and the date is 15th of January, which is correct. Then did they mention who we are buying from? Did not mention anybody, so we're not including anybody's name here. Okay, we'll just go straight forward and look for office stationery. Do we have office stationery? We have office supply. Let me just use office supply. So office, I can also create an account for that. So 1,000. Now I'll make this transaction 1,000, and that should be save and close. Okay, sorry, I can see save and close over here, so that is why I'll just click on that, save and close. That is okay. Now the next one is January 28, bought goods for resale worth 25,000, paying by check. Now it's goods. This is like an inventory, but of course they did not mention the goods and they did not mention the quantity, so there's no need creating this transaction as an inventory. Of course we are creating an illustration here. So if it is a real practice scenario, they will give us the quantity and the product. So but in this case, bought goods for resale, so we're just going to record a non-inventory item so that we don't track. So how do we do that? I have to go to list, then I'll go to item list. Then from item list, I'll select down, right click, new, from new, then I'll just this drop down non-inventory part. I don't want to track it, so I'll just name it goods. Okay, goods. Then of course I'll buy and sell, so I need to click this, check this button. And what account do I want to use to track the cost of goods sold? So I go to, there's freight cost, there's merchant account cost. So if I want to use merchant account, or I can say resale, cost of goods for resale. So these are all merchants. I think merchants should be okay. Merchant. So then the income account should be sales. We already have sales, so these two are selected. I can leave this empty and just click on OK, and everything will be fine. So now we already have goods. So let me click on my open windows so that I can see we don't have anything open so far apart from home. So what do we want to do? We want to create a sales purchase bought goods. So but then we pay by check, so I'm writing check first. So go to banking again, then I'll write check. Then this time around I'm gonna click on item. Items in QuickBooks signifies the product and services that you render, that you buy and render, you purchase and also render or sell. So in this case we are buying that item goods, so I'm going to click on that. Then there's no quantity, there's no inventory, so I just put the amount. The amount is 25,000, so 25,000, and this will suffice. So they're telling me that I have changed the price. Do I want to leave it to the existing one? I can just click on yes, no, I'll update it to 25,000, or leave it as is. I don't want to just this transaction. Then did they mention anybody? No, but it's by check. So this is our bank account. You can see balance now from the first transaction, which is 1,249. So if I do this, 25,000 is also going to reduce. I'm going to click on save and close. Then the next transaction is paid Adam Enterprises, a check of 35,000. Remember, we bought on credit from Adam. So let's see, how do I pay a bill? How do I pay for a credit purchase I've done before? The best thing, the only way you should go is to vendor and pay bill. Don't try check, it's a different thing. You don't try check, you go to pay bill. And as I click on pay bill, you can see Adam here is available as 50,000. So but how much did we pay? We paid Adam Enterprise a check of 35,000. It's fine, it's fine. So let's just click on that. But we can edit, so I have to just maximize this a bit, but the amount is 35,000. And then over here I'll enter 35,000. If you've watched my video before how to make part payments, you can also see this information there. So what dates are we paying? So let me quickly let me bring it back this way. Okay, the date is February 2nd, so I'm going to click here, February 2nd. Then it's check, of course it's check. So then I'll save, right? I can just save. So we have pay selected bill here. Click on pay selected bill, and that's saved. I'm done for that one. I don't want to pay another bill. I'm done for that transaction. So now let's check again. What else do we have? And then what else do we have? February 3rd, rent of 30,000 naira for business premises was paid by check. Rent for 30,000 naira for business premises, so we are paying for rent, which is 30,000. Also go by check. So we're going to go to bank, write check, then go to our expense tab. For rent, do we have rent? Okay, sorry, we're in end item. I have to go to expense tab. Then let's see if I have rent. Yeah, we have rent. And did they name anybody? No. So 30,000 being rent. So paid by check. That is business premises. I can just put business premises. Okay. Rent 30,000 business premises. The date February 3rd. So I'm going to select that, February 3rd, and I'll save and close. You can see the balance has been reducing. The next here is let me just click on. I want to see the home page. Okay, so March 5th, bought goods on credit from J Enterprise. This is another vendor. So remember I said if you are buying anything on credit in QuickBooks, you go to enter bill. So we are also buying goods, but of course we don't have J, so I'm going to click on add new, then we enter J enterprises. So I'll just copy that quickly and just paste here. Then I'll click on OK. So how much worth of goods? March 5th, they say. So go to March, then 5th. Bought goods on credit from J Enterprise, 35,000. So now I'll click on item tab, then select goods. This time around 35,000. They will still ask me if I want to change the price from 0. No, I don't want. Leave it that way. 35,000. So see, due in 10 days again. So because I did not select, this is a new customer again, of course. So due on receipts, I click on that. So they will, while saving, they will also show me that if I save and close, that I have done an adjustment, which is this. So click yes. March 8th, bought office stationery for 500, paying by check. I'll still go to banking, write check, then March 8th. So select March and then 8th. Then I'll go to expense tab, then office stationery. Yeah, I can use this office supply. How much is it? It's a 500. So with this, I can just save and close, and we're done for this report. So this is a quick one. Let's go to reports and check profit and loss, and also check our balance sheet. So please be mindful of these dates. Remember, the date we used was 2014 and we are in 2024. So you would like to go to all. So once you have all, you see your cost of goods, 60,000 that you purchased, right? Did we make any sales? We did not make any sales, right? Now this cost of goods sold, which is merchant, let's check. You can double click on that. We're done with the question, so let me just maximize that. So you can see we have a check and a bill. So let's go to the next. This is office supply 15, rent expenses 30,000. So 31,500 is correct. Let me see the question again. Bought 50,000 furniture. No, not this. Bought goods for the sale. What? 25,000. Commission. Then let's go to balance sheet. Go to report. Go to company and financial. Balance sheet also. You have this. So at the end of the day, we have a total of 158,000 from the 250 that we. Yeah. So then you see we have account payable. So once you check on the balance, we have furniture and fittings, fixed asset as 50,000, and then we have account payable, which is our furniture and fitting that we bought for 50,000 on credit. Then we also have owner's contribution of the 250,000, then the retained earning of 91,500. So looking at the question, these are the information you get from your report. Then you can go to company and financial. Let's quickly check on cash flow. This is our cash flow. Double click on that. Okay, sorry, let me just use all. Yeah, everything is out already, so I'll just use all. Okay, then you see all the information from the cash flow points. Let's use this and all, brother. So this is where I want us to see the operating is available, the investing and financing. Remember, we used 2014, so I had to use all for us to see everything from our reports. So this is how you still use your QuickBooks to keep your financial records intact.